Hello everyone and welcome to this week's market analysis from STP Trading. And the gold chart, considering the bearish wave that had formed in this part of the chart, we had a corrective move that with high probability could be forming a triangle pattern. Based on this, it is expected that the price could break through the support zone as well as the BD trend line. In this case, we might see a continuation of the bearish move down to the previous low on the chart. And now we have the possibility of further downside, which could extend to the 61.8 or even 50% Fibonacci levels on the chart. However, in the next scenario, if this support area holds, the price could break through the resistance trend line and the resistance zone. And in that case, the bullish continuation, at least up to the 61.8 level, could form on the chart. If the price breaks neither the resistance zone nor the support zone, it may show some correction and fluctuation within this range. And as the chart develops, the corrective pattern forming in this area could be better identified. In the Euro-USD chart, given the corrective move that has formed, we still expect a corrective pattern, which could continue after touching the resistance zone. Once the price passes this resistance zone, further bullish confirmation toward higher resistance levels is possible, and in that case, the possibility of the corrective pattern still remains in this section of the chart. And here, a triangle pattern may form, which could complete the triangle and wave E on the chart. A break below the support area could trigger further confirmation and bearish movement. And if the price falls below the previous low, the continuation of the corrective and bearish trend could be probable chart scenario. In a medium term, based on the price behavior near the resistance zone and the BD trend line, if the BD trend line is broken, it could confirm a bullish trend on the chart. Otherwise, the corrective pattern could continue in the medium term. And on the Bitcoin chart, considering the recent bearish correction in this area, we have a potential double combination pattern, where the triangle in this zone could complete its move around the 100% and 78% levels and start the wave E. The 78% level could complete this corrective structure, leading to a pullback down to the bottom of the ascending channel. And as long as the trend line and the channel's floor are maintained, we could see a bullish continuation on the chart. In the next scenario, the uptrend may continue toward the 100% level or with a slightly less probability up to the resistance trend line, where we may see the end of wave D and the start of wave E. After that, the bullish continuation could be the probable scenario on the chart. At the top of the X-wave pattern, this resistance level, which overlaps at the 100% level, forms a significant zone. And when the price reaches this area, it could experience a correction. But if it's broken, a bullish continuation would remain likely. And finally, the Dow Jones Index, after the correction in this area, it managed to break through the resistance zone and continue its upward trend. In this chart, there was a possible triangle formation as well. And after the completion of wave E in this area, the bullish trend began. By holding the support zone, the bullish continuation up to the 78% level could be seen on the chart. If the support trend line is broken, a further corrective move down to the next support zone is possible, and afterward, the bullish trend could once again be likely scenario. Also, breaking this zone, however, would invalidate the bullish trend, and continuation of the corrective and bearish movement could be the probable chart scenario. We hope you find this analysis useful. Don't forget to like and leave us a comment.